What's up guys, Jake here. In this video, let's talk about a new long-term position that I'm taking in my Schwab account. Currently in my Schwab account, I've been sitting on a lot of cash trying to decide what do I want to do with it. So in this video, I'm going to make the bullish case for you why I think Apple is still a good long-term investment even though it's up so much. Over its lifetime, Apple is up 376,000%. That's a little much, but looking at the last 5-year performance of this company, their stock price is up 453%. Its market cap is the largest in the world at 2.49 trillion. But I argue that Apple still has room to run and it will continue growing faster than the broader market. So why is now a good time to make a long-term investment in Apple? And it's because their fourth quarter earnings results were great, but not as great as the street was expecting. There was no pop in the stock price on earnings, and the reason why is because Tim Cook said that they're experiencing supply chain woes, just like every other company in the world. And I'm not too concerned about this because being that Apple is the largest company in the world, Apple has a way of getting what they want, otherwise they'll cut you loose. They'll just start making it themselves. So I'm sure that Apple's suppliers want to retain Apple's business, otherwise, yeah, Apple will just maybe make it themselves and cut you out and you'll lose the largest customer in the world. So when we look at Apple's stock price going back, it's currently at about 150. And it's been hovering around this 150 mark going all the way back to July of this year, so 4 or 5 months ago. Now, when you look at these charts, stock prices have a way of just kind of gravitating towards nice round numbers, such as $100, $200, or $150. So even though Apple sometimes pulls back, it goes back to 150. Maybe it gets above 150, once again pulls back, pulls down, pulls back. So right now it's kind of locked in on this $150 mark. You could wait for it to pull back, but I think over the next 2 or 3 months, Apple will pull away. And then what is the next nice round number that Apple will just naturally gravitate towards? It'll be $200 a share. For fun, I'll show you their fundamentals, even though we all know how bonkers profitable Apple is. Net sales, this was September of last year, they did 50 billion in sales. They increased that by 15 billion to a total of 65. When you look at their services, increased from 14.5, 18.2. So their total net sales in one quarter was $83.3 billion. You look at what it was 12 months year over year, 365 to 274. These are just mind-blowing numbers, what Apple does. Net income, this is their, sales minus expenses. They did $20 billion in net income or profits for the September quarter. And this was disappointing. This wasn't as good as people thought it would be. But to show you how powerful and how profitable Apple is, you don't need to look any farther than total operating expenses. So in the third quarter, in September of last year, they spent 9.9, so we'll say 10 billion on operating expenses. They only increased that to 11.3. So basically, they only increased it by 1.4. Yet, how much more in profitability did they do, net income? They increased it by 8 billion. So by putting in an additional $1.4 billion worth of people and R&D and facilities, they generated almost 8 billion more in profit in one quarter. Next thing that just stands out, which is tremendous for Apple, is their growth in Greater China. So this is their net sales by region. And in the Americas, they did 30.6 last quarter of 2020. And this quarter, they did 36.8. So they grew it by, 6.2. That's not bad. But look at China. China, they did 7.9 a year ago. And this quarter, they're reporting 14.5. That is almost a 100% increase in sales in just China. Yeah, there's a little bit of growth in Japan, a little bit of growth in Europe, a little bit of growth in the rest of Asia Pacific, but it's this China number. When you look at how much they've increased their net sales in China, what do you think it's going to be a year from now? It's going to overtake Europe. I guarantee you by this time next year, Apple will be doing more net sales of iPads, iPhones, MacBook Pros in China than in all of Europe combined. And just project this growth out. China has a population of 4 or 5 times greater than the United States. I think that someday Apple will be doing more net sales in Greater China than maybe the Americas, maybe the United States. This is definitely possible, which is why you'll never hear Apple say anything bad about China or the Chinese government. Last thing I want to point out to you about their financial statements, if we go down to the cash flow statements, I just want to highlight for you what they're doing as far as repurchasing of common stock. So this was, let's see, 12 months ending last year. So they purchased back $72.3 billion worth of their own stock buybacks. And this year they've done 85.9, and they've announced that they're increasing it. So Apple, it's been in this expansion and growing period for so long, and it's still growing rapidly, but they're finally taking company profits and they're saying, we don't know how to use all of this money we make to increase our profitability and sales, so we're just going to reward our investors by buying back stock. And when they buy back stock, your outstanding shares become more valuable. There's no other company in the world that's going to be doing this much in dollars, probably, of repurchasing of common stock. So it's very impressive knowing that if you invest in Apple today, the company has your back. They're going to be basically, pumping you up on the New York Stock Exchange by doing all these stock buybacks. Other reasons I'm bullish, other than just being an Apple user myself, I think the new M1 chips that they're rolling out in their MacBook Pros and soon their Mac Pros later in 2022, I think anybody who's been on the fence whether or not to get a new computer or a new laptop who's an Apple user, they're hearing about these M1 chips, the chips that Silica integrated with their iOS operating system. Everything is more energy efficient, everything runs faster, fewer bugs, fewer crashes. And when you look at the prices of these laptops, I plan on buying one. I bought the new M1 13 earlier this year. Absolutely love it. It's a phenomenal device. I would rather have a 14 or a 16 just for the bigger screen, plus the new MacBook Pros are going to have SD card slots, HDMI ports, other improvements as well. So I'm probably going to give this one to a family member and then upgrade myself to a 14 or 16. But just for fun, guys, let's look at one of the base models of the 16. So we're looking at 2400 basic, 26 or 34 before you try and add extra stuff. So people are going to pay it. People love it. They can't get enough of this stuff. Additionally, I think the rumors about the Apple Car have kind of subsided for now, but I think these will resurface in 2022. Apple's working on it. This has been something in the works probably since 2000 yet. In 2014, Apple began working on Project Titan with upwards of 1,000 car experts and engineers developing an electric vehicle. Now, it kind of stuttered out, but I think given the moves of Tesla stock in the last 2 years, Apple just can't ignore this. And they've been working on it. They've been acquiring other companies. I forget the name of the battery company they acquired last year, but Apple's trying to figure it out. Now, when is the first Apple car going to be on the road? Probably not till 2025, 2026, but this car is coming, and I think the rumors and the speculation and the hype will start to play out later in 2022. So what kind of position do I want to take in Apple? And the easiest way to play this out is just to buy the stock. And if that's all you want to do, you don't have to overthink it. If you buy the stock, you'll get to collect the dividends and any appreciation in the stock price over the next year, 2 years, or however long you want to own it. But I like to be a little bit more extra on this channel, so I'm going to be buying long calls that will expire in January of 2023. And let me explain to you what the benefits of buying long calls on a great company like Apple will be. So let's go to the option chain on Charles Schwab, and we'll just go through together what you can expect by buying long calls. And for expiration, I want to go with January of 2023. The reason why we're doing January of 2023 is because this is generally the yearly, most traded yearly contract. You'll notice there's contracts for September of 2022, but they don't even have contracts for October, November, or December yet. So if you want to trade in 2023, most people are trading the Januaries until they get into 2023. So let's select this, and it's telling us this is 444 days in the future. Now, when we're looking at the option chain, what we care about is, this is kind of strange, but we care a lot about option interest and volume. We want to make sure that we're getting a good price for this contract and that it's being frequently traded by other people. Now, when you're purchasing contracts that are far out in the future, you generally want to go with nice round numbers. So don't select, for example, 155, volume of trades today, only 52, option interest, 10,935. If you go with a nice round number like 150, there's more people buying and selling it. So if you ever want to sell to close this later, you can find a buyer. The bid ask is also pretty reasonable. It's only about 10 cents on the spread right now. So I know if I want to get into this or get out of this, I can do so pretty easily. Now, normally when I buy long calls deep in the future, I just go with the closest out-of-the-money strike price. So the shaded region it means that it's in the money, which means that there's already a little bit of intrinsic value in the contract. So Apple's current share price is $150.31. With a strike of 150, that means that there's 31 cents worth of intrinsic value. So if the contract were to expire today, you could buy 100 shares of Apple at 150 from this person, whoever is selling this call, and then you could go on the New York Stock Exchange and sell them for 150.31, meaning you'd make 31 bucks on that trade, not counting the break even or the premium. Now, maybe you've heard of LEAPS, and LEAPS stands for Long-Term Equity Anticipation Security. It's a form of options trading where people buy deep in the money call contracts or put contracts in order to make a profit. So let's just think about the break evens for buying long calls, because this is very important. Let's pretend we go with the strike of 150. Where does Apple's share price need to be in 444 days for me to make a profit on this long call? And what you do is you add the premium, we'll just say $18.55, to the strike of 150. Apple needs to be above 168.55 for this contract to make me money on January 20th, 2023. And once again, you can sell to close any point in time to get out of the contract. But if you did hold it until expiration, I need Apple's share price to be above 168.55. Now, when we look at Apple's share price, I'm just super confident that once again, it's hovering around this 150 mark. At some point in the next couple months, maybe their quarterly earnings in January or perhaps next summer, the tech stocks really seem to make a huge move over the summer. So at some point, it's going to shoot up to 200 and then get stuck there for another 6 months and kind of trade sideways. So I'm confident it will get to 200. So I would like to go with this strike of 150 with my break even being 168.55. But what if you wanted a lower break even? You could buy a deeper in the money call contract. Let's look at the strike of 120. Add the premium price of 36. Well, now for this contract to only make money, Apple needs to get to 36 plus 120, 156.90. It's easier for Apple to get to 156.90 for you to make a profit if you buy a deeper in the money call contract. So what's the trade-off here? The trade-off is you're locking up more of your own capital. You're locking up more premium waiting for this to happen. So $36.90 is the premium you're paying today to buy this contract, and this is kind of what you're locking up for 444 days. So would you rather pay $18.55 with a strike of 150 and a higher break even, or would you rather pay $36.90, lower break even, but you're tying up more collateral? I personally would rather go at the money, basically, not pay for any current intrinsic value, and then just buy more of them. I'm looking to take a position in my Schwab account of about $5,000 or $6,000. So I could either buy two Apple long calls with a strike of 120 for about $7,000, or I could buy three at a strike of 150 for under 6,000. So this to me is a better deal, and this is what I'm going to go with today. So let's go ahead and just do this trade right now. I'm going to select this. Let's go to the top, and I am going to be buying to open, and I want three of these. So let's go ahead and click on trade. We're not doing any kind of crazy vertical spreads or anything. There's only one leg. This is a long call on Apple. I'm just going to do a market order so it fills, but if I wanted to do a limit order of $18.65, I could save $15, but I don't really care. I want to get this filled for this video, so let's go to review order and execute. Okay guys, we are back on my account page, and it's showing quantity of 3. These are calls with a strike of 150 that expire in January of 2023. My cost per share was $18.66, or $1,866. So how do I make money on this? What is my max gain? And let's do some mental math here. And for the break even, you take the cost per share, add it to the current share price, or the price when I bought it. So it was about 150 plus 1866. So I'll just mentally remember that my break even is about 168. So if Apple's share price by expiration or any time before that starts getting above 168, well, now it's simulating like I'm gaining $1 per share per contract. So if it's at 168 at expiration, that's my break even. I don't make anything. But if Apple goes to 169, well, now I make $300 because it's 100 shares, $1 move in the share price, 3 contracts, $300. If it goes to 170, well, now I've made $600. So if it went to 200, that would be $30. 30 times 3 is 90, multiplied by 100. So what is it? $9,000. So yeah, potentially if I held it until expiration and Apple was about $200 a share, I would be up $9,000 on these 3 contracts. But I don't see myself holding it until expiration. If Apple's share price shoots up to 200, I'm just going to assume it's going to get stuck there for a while anyways, as it gravitates towards a nice round number. So once it gets to 200 at any point between now and next January, then I will sell to close these contracts and take a profit. Okay guys, that was an explanation of a long call on a very good company such as Apple. If you enjoy these kinds of videos, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.